with the latest on the corporate front, all the market trends, expert opinion, and sound business advice. It is your unique window into the business world, direct from the heart of China.
Hello and welcome to Biz Today. I'm Zhao Yang in Beijing. Coming up, we will have half an hour of business news and analysis. On today's show, steady progress. China's gross domestic product grew 5% in the first half of this year, and the country's humanoid robot sector is developing rapidly. And now let's begin with our top story. China's National Bureau of Statistics released the figures for the country's GDP in the first half of the 2024, with a 5% growth year-on-year. CGTN's Zhao Yunfei has more.
China's gross domestic product has reached 61.68 trillion yuan, or $8.65 trillion US dollars in the first half of 2024. That's a 5% growth year-on-year. The National Bureau of Statistics has released separate figures for first two quarters, showing the country's GDP expanded 5.3% in Q1 and 4.7% in Q2.
The overall economy is stable and has made progress. Production has grown steadily and demand continues to recover. Employment and prices are generally stable. People's income continues to increase. New driving forces have accelerated growth, and high-quality development has seen new progress.
The latest figures show how China is forging clusters of strategic emerging industries with international competitiveness.
Examples include drones, low-altitude economy, new energy vehicles, green economy, large language models, and so on. Whether in manufacturing or service industries, some iconic companies are constantly developing, providing new fields of growth for the Chinese economy.
China had set the goal in March for the country's annual GDP growth at around 5%. This is a target under the consideration of evolving dynamics at home and abroad.
China is the second largest economy in the world, with such a large volume, and the external environment is not very certain. It is indeed something to be proud of to have achieved such results.
The National Bureau of Statistics says overall economic growth relies on the support from policy incentives, rebound in external demand, and development of new quality productive forces. Zhao Yunfei, CGTN, Beijing.
And official figures show that consumption, domestic investment, and foreign trade remain the top three major engines for China's economic growth. Boosted by supportive policies, retail sales of consumer goods rose by 3.7% from a year ago. Service consumption stood out as a bright spot. Meanwhile, fixed asset investment went up by 3.9% on a yearly basis in the first 6 months, and in particular, investment in high-tech industries showed robust growth of more than 10%. And in terms of foreign trade, the volume jumped 6.1% year-on-year during the same period. So for more on this, join us on the line now are Professor Qu Qiang, Fellow of Belt and Road Research Center at Minzu University of China, Andy Mark, Senior Research Fellow at the Center for China and Globalization, and also Yan Liang, Professor of Economics, Willamette University. So Professor Qu, I will start with you. China's GDP grew by 5% in the first half of this year. So what's your thoughts of China's economic performance?
Well, I think Chinese economic performance is actually within our expectation. As we discussed in the beginning of the year, if you remembered, we were talking about China is going to achieve 5% of the GDP growth in 2024. And there are some people are, doubting about this target. But after half a year, I think this result has been fully delivered. While the first half of the year and the Q1 were been faster and the Q2 a bit slower. But you have to understand this is actually a very normal, conventional pattern of the every quarter's change, because in a Q1, usually the banking sectors in China will issue lots of social lendings. Therefore, the whole GDP counting will be higher. And also when it extended to the Q2, it's going to be slower a little bit because the whole world market as well as the domestic market is getting close to the summer vacation. And usually in the Q3 and the Q4, especially after the September, we're going to have the second half of the year as the banking sector lending activity been reinitiated toward the end of the year. So we're going to see another climax actually from the September to December. So this is actually within China's conventional pattern. So I'm fully confident that the 5% of the GDP target will be achieved. And more than that, we have seen many bright spots. For example, export remain very, very strong. We've been achieved about 100 billion US dollar of the trade surplus, considering the whole world, export and import has been shrinking. China made such a huge gain, I think is outstanding. And also we've been seeing the double-digit growth in the high-tech manufacturing and the high-tech service sectors. This is also a phenomenon, especially given the whole fixed assets investment all around the world has been shrinking, and China has been, very successfully and smoothly shifting gears towards a better or well-organized, structured economic structure. So I think this is another very important achievement, and I think China is trying to, shift weight from a traditional manufacturing sector towards a high tech, and this is going to be also not only currently but also for the long-term trend. And also we've been thinking the consumptions and other area has maintained its growth. Of course, we have some slowing down area, for example, real estate market. But I think the slowing down has already been stabilized in many big cities, Beijing, Shanghai, and Shenzhen. I think real estate market has already been recovered and also get a higher price in the past 1 month. So I think in the second half of the year, we're having a brighter expectation.
So, how do you view China's economic performance so far this year?
Right. So I agree with Professor Chu. I think well within the expectation of China's growth target of around 5% of the whole year, as we now achieved 5% growth in the first half of this year. I think, the Statistic Bureau's spokesperson has put it that the progress has been made in upgrading industries, but the domestic effective demand remains insufficient. And I think this is a fair assessment of the current Chinese economy. I agree with Professor Chu that there's these seasonal factors that relatively, I would say, slow down or decelerate a little bit of growth in the second quarter compared to the first quarter, right? 5.3% versus 4.7% in the second quarter growth compared to the first quarter. However, I think we need to, again, bear in mind these seasonal factors, but also, keep in mind of the, industrial transformation, right? These high quality growth with productive, high quality productive forces that we're seeing in the industrial sector that has been playing out. So Professor Chu talked about the high-tech manufacturing. That has gone up by 9.5% in terms of the investment. And in terms of the output growth, we're also seeing the high-tech manufacturing is growing much faster than the general output growth. It's 8.7% for the high-tech manufacturing compared to just 6% of the overall industrial output value-added growth. So what we're seeing is really, the manufacturing sector has becoming more and more high-end, intelligent, and green. So I think this is very important to see. This is not only just affect a quarter-to-quarter growth, but really in terms of the long-term growth. Now, in terms of the demand, I definitely think that, some of the, I would say, especially in the Western media, they talk about, sort of the collapse of the consumption in China. I think that is completely over-exaggerated. We are seeing actually the real growth of per capita disposable income has gone up by 5.3% in the first half of this year, which is higher than the over GDP growth. So what that means is the household is seeing their real income increasing. When it comes to the service consumption, that has gone up by quite a bit. So I think the confidence of spending is still there in the household. So I think definitely there is a way to strengthen the domestic demand. But I also agree, we're seeing very strong export growth of 6.9% of the first half of this year, which I think is very helpful to boost the overall demand on top of government spending, on top of investment spending. So I think overall, the industrial upgrading has been really effective and making a lot of progress. And the demand side, there's still room to improve, but it's still pretty solid.
And so, Andy, the foreign trade grew by 6.1%. So what do you think are the major driving forces that contribute to the increase of foreign trade?
Well, I think there's a couple, Zhao Yang. But before I get into that, I want to also just share a little bit of context within which this is happening. So China's GDP growth, and we've heard, I think, a very good analysis of this by Professor Xu and Professor Yan. But I also want to add a little bit of context, too. On a relative basis globally, the U.S. grew at 2.7%. Germany, I think, was 0.2%. So, I think on a relative basis, I think China's put in a pretty good performance in this first half. And as you asked me, I think trade is an important part of this. China always has been very competitive in providing cost-effective, high-quality goods. Now it's moving up the value chain to much more high-tech goods as well. So that's one factor, I think. I think we also need to look at what's going on in the United States with these elevated interest rates. And this, of course, creates more demand and strengthens the dollar. And because much trade is denominated in U.S. dollars around the world, this, of course, makes Chinese exports more competitive as well. So I think, these are probably the two main factors, in addition to, what we've heard about this shift towards industrial upgrading. And I think, generally speaking, I think China is in a solid place. And if we look back to the Central Economic Work Conference priorities, a lot of these we're seeing the output here of these, or the results of these priorities, which include support for exports, strengthening domestic demand, etc. So I think, again, no surprises in a way, which is a good thing when it comes to economic performance in China.
So, Professor Chu, fixed asset investment in China went up by 3.9% in the first half of this year. And in particular, investment in high-tech industries showed robust growth of more than 10%. So why is high-tech investment showing such big gains? And what do you think is the role of China's high-tech sector?
Well, I think Chinese high-tech sector is basically mushrooming and growing up very fast. I think China, not only China, I mean, all the economies, if they want to climb up the higher step on the ladder of the value chain, they need to go through this road. This is like economic pattern. So I think China right now is trying to shift its gear and shift its weight towards high technology. And we have already seen very good results, for example, in lithium battery EV and solar panels and digital devices. This is what we call the new quality productive forces. We have already made a lot of the achievement. I think one of the reasons is because the Chinese government and industry has made very advanced plannings, maybe 10 years or 15 years ago towards this target. And secondly is that Chinese industry and Chinese government has put lots of investment in this regard. So I think this important planning, this important investment, as well as talent nurturing, has enabled Chinese high-tech industry to achieve what it makes today. If like 5 years ago, anybody's going to tell you, okay, Chinese automobile industry is going to be the number one in the whole world, nobody is actually going to believe that. But right now, it's kind of the truth. So I think high-tech investment is going to be not only important for now, but also is going to be a next very important trend in the future, replacing what's supporting China's economy in the past 40 years. It's like the traditional manufacturing investment as well as traditional infrastructure investment.
And yeah, so how is China forging clusters of strategic emerging industries with international competitiveness? Can you give us some examples like drones, low altitude economy, new energy vehicles, green economy, and the large language models and so on?
Right. So these are the so-called emerging and strategic industries in China. And I think starting in 2015, with the Made in China 2025 plans, I think Chinese government has started with this more sort of selective industrialization plan or industrial policies to really focus on some of these strategic industries, because these industries are really the cutting edge technologies. And a lot of these technologies like AI, as you mentioned, and also industrial robotics, new energy, new materials, all these are also general forms of technologies that can be applied to a vast majority of the traditional industries and help these industries to upgrade. So these industries really, I would say, hold the future of the so-called high quality productive forces or the high quality development, right? That is meant to be productivity driven, that requires less resources, and that would be more inclusive by creating good jobs cheap, high quality consumer goods, but also more sustainable. So I think this is very important for China to continue to develop these industries. And I agree with Professor Qi. I think the government's strategic vision and public investment have been the important driving forces. But we also have, very large talent pool. We also have very willing consumers to adopt EVs and, utilize these cutting-edge technologies. So I think all these are very important ingredients for the success of China in those technologies. So take the low-altitude economy as an example. I think China is really having the first mover advantage in these markets. Now we're seeing a lot of developments in, human or manned or unmanned drones that are, really could be the future of transportation industry. We're also seeing, China's new trails, as we just mentioned. Despite the global, turbulences, China's new trails, the EV automobiles, the batteries, and also the solar panels have got the exports of these three have gone up by 30% year on year in the first half of this year. So we're seeing China not only, able to upgrade its own domestic industries and transform its industrial bases, structures with these new technologies, but also China is becoming much more globally competitive. So I think this is very important to secure the industrial supply chain and move up the value chain, and also make the global supply chain more resilient because China is such a stable and important and powerful manufacturing powerhouse. So I think, this development of the high-tech industries is not only important for China's long-term and short-term sustainable growth, but also I think for the global, global supply chain.
So Andy, for China's green economy or green transformation, could you tell us more about the development of the solar industry in China, and how is solar leading the energy transition here in this country?
Well, I think the green energy transition is something that China has recognized as important for a long, long time, and has articulated a commitment to success in this area. So I think that's first, recognizing that something's important, and then mustering the resources to do something about it. And here I would put solar panels maybe in the same bucket as with new energy vehicles, especially electric vehicles as well. Because for both of these areas, you not only need technological breakthroughs, you have to convert these technological breakthroughs into manufacturing capability. You have to have distribution, et cetera, in order to make this a reality. But what China, I think, excels at with these things is bringing together first hard infrastructure and soft infrastructure. So these require standards, they require regulations, et cetera.
Well, we're speaking with Andy Mark, Senior Research Fellow at the Center for China and Globalization, Professor Qu Qiang, Fellow of Belt and Road Research Center at Minzu University of China, and also Yan Liang, Professor of Economics, Willamette University. And after a short break, China's humanoid robot sector is set to grow faster than the global average. Stay with us.
Welcome. I'm Elaf Elad, economics professor and member of the Data Science and AI Center at New York University, Shanghai. On the World Today program, you can find in-depth and impartial insight, as well as critical commentary on key trends in the Chinese economy, financial technology, business, and blockchain. To prepare for the world tomorrow, join me on World Today.
You're listening to Biz Today. I'm Zhao Yang in Beijing. Witnessing the economy grow by 5% in the first 6 months of this year, China vowed to continue developing new quality productive forces to counter increasing uncertainties during the country's industrial transformation and upgrade. China's humanoid robot sector is set to grow faster than the global average. Reports say that the market is expected to reach 2.2 billion yuan by this year and nearly 38 billion yuan by the year 2030. So, Yan, first of all, China is now the fastest growing robot market in the world, and more than half of the industrial robots installed worldwide were made in China. So, what are the main factors, do you think, for the rapid development of industrial robots in China?
Right. So robots, especially industrial robotics, have a very large market in China when it comes to the manufacturing sector and also construction sector. We're now seeing 3.92 robots per 100 workers in China. And one of the reasons is because, first of all, we have a lot of demand for that. China has the world's largest automotive industry, and the automotive industry has been, accounting for nearly half of the total demand for industrial robots. So given this very large basis of the industrial sort of automotive sector, we're seeing a lot of demand for the industrial robotics. Now, on the other hand, we're also seeing a lot of the companies that are robotics related. They have been developing and they have been investing in this industry. Also take the service robots as example. China's service robots related enterprises have gone up by close to 300%. From 2017 to 2021. And so that market also has been really growing and to reach, 46.7 billion Chinese yuan in 2021. And it's expected to grow to 73.5 billion in 2023. So I think, both the manufacturing sector and the service sector have a lot of demands for these industrial robots. One very interesting example, as we talk about automotive industry and the demand for it, is we're seeing, for example, Xiaomi, their EV factories is basically, staffed by these robots. You can see some of the videos that are surfacing online with all these industrial, robot arms. They're producing cars at the speed of 40, their SU7 cars per hour. And that's basically a new car every 76 seconds. So I think, with this great, market and the large demand and enterprises that are entering in the sector and invest heavily in the production and application, I think, China's industrial robots markets are going just to expand. And as you mentioned, in 2022, China installed 268,000 industrial robots, which is 52% of the total global installed robots. So yes, China has a very large demand, large supply of production, and large integration of the industrial robots in its industries, and expect to continue to grow in the near future.
So Andy, could you tell us more about humanoid robots? What are their usage and what can they do to change our work and lives?
Well, that's a good question, Zhaoyang. I think they have the potential to change our lives in very revolutionary ways. Because when we think about humanoid robots, or perhaps robots in general, and combine them with artificial intelligence, we can have robots that can do everything from work in factories to fix our plumbing, cook our dinner, wash our clothes. So this, on the surface, sounds like a good thing and can make our lives easier. But there's also some very profound implications that I think are not widely recognized yet. So one other thing that robots can do, especially humanoid robots, is they can work on making even better humanoid robots. And some call this idea recursive innovation. So what this could end up happening then is we end up in a world with an infinite labor supply. And economists know that whenever the supply of something becomes infinite, the price falls to zero. So what this means is that we could have a world where robots can make anything we want, more or less, for free. And I think this will have not only profound economic implications. So I know this sounds pretty far out there, but this is certainly some areas that philosophers, analysts, as well as some technologists are examining as well, and that it seems like, if not a likely future, this is a plausible future.
So, Professor Qu, why is it such a big market here in China for robotics?
China is already, I'm not saying one of the largest robotic market in the whole world. Actually, it is the largest robotic market in the whole world. Well, for the robotic market, we're talking about the making of the smart robot, a smart robot, and also the using of the smart robot. Well, in China, from the both end, supply end and the demand end, China is already the largest market of the whole world because China is the largest manufacturing market and a powerhouse of the world economy. So I think that goes without saying. And China has formed many champions in each niche market. For example, from the upstream, midstream to the lower string, we have many of the companies making the core parts, including the torque making, including the decelerator, including the coders, including the control systems. So all these has been already become the champion not only in China, but also the champion of the whole world. For example, the Mingzhi Electronics, for example, the ZD Lead, for example, the Double Circle, and Haozhi Electronics, Haozhi Machineries. And also for the midstream, companies, we have Tesla, we have Xiaomi, and we have the UBTech. And also for the downstream applications, we have more of the companies focusing on each niche market. So basically, I think we can just give you one, description. If in China this market has been suspended, the whole world robotic companies and the whole world robotic market will be suspended as well. So I think Chinese robotic market has lots of potential in the future, and also it's been supporting the whole world robotic market to evolve into the next version.
Well, we're speaking with Professor Qu Qiang, Fellow of Belt and Road Research Center at Minzu University of China, Andy Mark, Senior Research Fellow at the Center for China and Globalization, and also Yan Liang, Professor of Economics, Willamette University. And that's all the time we have for this edition of Biz Today. I'm Zhao Yang in Beijing. Thank you so much for listening.